In backtesting, how do you account for bad market data? My name's Dave Mabe. I've been trading 25 plus strategies every day for the last 20 years. This is a really good question that came in from a viewer of the webinar I recently did for Interactive Brokers. There were a bunch of good questions at the end of this webinar, and I didn't get there. We ran out of time to answer all of them. So I'm going back through the channel now and answering a lot of these. So go back and look at the shorts I've been doing recently. You can see a lot of really good questions. I could tell that the level of sophistication that the traders had that were asking these questions was really good. This question is a really good demonstration of that. So how do you account for bad data in a backtest? The first thing I do when your backtest completes, sort it by the profit column, and then look at the lowest profit and then the highest profit across all the trades in your backtest. A lot of times the ones that have bad data, you're going to see a really large number or a really small number. So a lot of times you could just quickly see bad data from those trades and go back and look at the charts for the trades that happened and see, oh, okay, well, this came from bad data. I can clearly see that on the chart. Amibroker has a really nice way to go back and do a chart review for every trade in your backtest. So even one from years ago, you can instantly go and look at the chart for the actual trade, which is really convenient. Now, this won't be able to detect some of the more subtle changes you might see from bad data. To account for this type of data, and I use basically what I think of as a backstop. So when I make trades live, I'm measuring each day how they measure up to the backtest. And if there are differences, I'm going to see them, whatever the reason might be. It could be bad data, it could be any number of reasons. But I have a process that flags those for me so I can dig in and see exactly what the problem was. And this is going to help you get more confidence in your strategy. And over time, you'll be able to, when you have the confidence and you see the things that can go wrong and how big they are or how small they are, how significant they are, a lot of times there's something you can go do to fix it or minimize it somehow. And you can also see just how big the problem is. Maybe it's not even that big of a deal at all. Maybe it only affects a small number of trades, but maybe it's a big deal and maybe there's something you can do about it. So just having this backstop process is going to help identify problems due to bad data, but also any number of other things. So it's a really valuable process to have, and I encourage all traders to be doing that. Great question. Talk to you next time.